Okay, thank you everyone for clicking in, and really happy to be speaking at the top of the conference with this initial scene setter session for you. I think the first thing to say is a big thank you to everyone at Clarion and Sports Betting USA for inviting us along as H2. In the spirit of special relationships, we actually have a pretty good one, both with the event and also everyone at iGaming Business North America. And it's timely too, as I was actually one of the first to speak at the inaugural Sports Betting USA conference, although that now seems some time ago, back in 2017 in New York, and obviously a lot has happened since. Just looking back then as context, we were showcasing a 6-month piece of work that we'd just done to establish the true size of the illegal offshore US sports betting market immediately pre-PASPA's repeal. The headline figure we reported at the event was that some $10.4 billion GGR, or put another way, nearly $200 billion worth of illegal bets was leaving the country in the year immediately preceding the Supreme Court decision. Why was that important then? Well, it was not only gave us a good indicator of the latent demand that in sports betting there was, but fast forward 3 years, and we still think it's actually an important metric to track the pace of the rollout of the current regulated market, and exactly how much of that 10.4 billion has been channeled onto legal offshore play. And we're going to cover more of this in the slides that follow. We don't have a huge amount of time, so I'm just going to look at the top lines for you in terms of the 2020 numbers and what is the evidence, what are they actually saying. But we're also going to put up our view as H2 on some of the emerging trends, and also pose a question at the end of the slides into how things might roll out for the rest of the decade. Okay, so in terms of the numbers, I guess we all started the year thinking this is dawn of a new decade and everything's in pretty good shape. Well, the reality 10 months later is a sector that has effectively dropped 26% globally. The breakdown of that is interesting in that it's some 39% in retail and only 7% in online. And that's probably significant because if you look at what the context of what the World Trade Organization is predicting for global trade overall, which is a decline of between 13 and 32%, it actually positions the sector's land-based activity alongside industries like automotive and travel, but has online in the same company as some of the higher performing sectors during the pandemic, such as the media, telecoms, big tech, and logistics. And this is a theme we're going to come back to in the slides that follow. The headline overall is a sector that has effectively gone back to 2010 levels, so almost a decade to where it was GGR levels at that particular time. However, there is good news for the slide on the right-hand side in that we believe it will bounce back. And that's primarily because of the phenomenal rise in the percentage share of online that we've seen during the year. And this is depicted by the red dotted line in the right-hand graph, which in the space of a few months, you can see has jumped from 13% of all gambling pre-COVID to 19% now, and it's going to possibly reach 20% by the end of the year. In terms of US sports betting and COVID-19, well, it's been effectively a drop of 90% at the pandemic's peak in mid-April. But that is principally because of the close down of sports, right? So there was absolutely no content to, or minimal content to bet on. But probably three reasons we pull out as well that are interesting in terms of what's happened during this period. The first is, except for the loss of March Madness to the calendar, which was, of course, hugely significant to the market, the impact happened principally during the major US sports low season, with only the MLB directly impacted during the pandemic's peak from mid-March to end June. The second reason is the prevalence of mobile that there is in the market currently. Now, we know that of the 19 states opening up so far, only 4 haven't allowed mobile, and one of those, New York, has long since accepted that it should have. So this shift to the mobile channel in particular has seen the market make a step change really pre and post virus, with now 3/4 as opposed to 2/3 of all bets being placed remotely on handheld devices. The third reason is probably the rearranged calendar and the backing up of the 29-20 NBA season, in particular into the start of the 2020-21 NFL season. And this led to a bumper August and September months, with September's 2.5 billion handle in particular being the biggest singular month we've seen so far, and up 75% year on year in comparison to what happened in September 2019. So in terms of our forecast going forwards, we can see that resilience playing out. And what we're basically seeing is the US now as the fastest growing market in world sports betting. We will hit 1.4 billion GGR at the end of 2020, end of this year, and then we'll almost double that again at the end of next year before it gradually rises up to 6.8 billion by the end of the first term of this next presidential cycle, or if you like, the next presidential election in 2024, where at that time we estimate we will see some 44 states will be operational, with only a handful not participating. From that point to the end of the decade, we have the sector gradually maturing until it nearly peaks at a 10 billion GGR market, 9.9 billion to be exact. But the interesting thing to note in that top left-hand graph is the relative decline of retail as a proportion of the market, from a peak of what will be 2.4 billion in 2026 at the middle of the decade to some 2 billion by 2030. In the chart underneath, the other significant development is linked to that is the huge, quite simply huge, three-figure CAGR growth in mobile over the next 1 to 2 years, which is accelerated to a large extent by what has already happened this year and the recovery now underway, with 3/4 of those bets being made on handheld devices. So all in all, you would conclude it's a sizable tax contributor to the US economy over the 2020s. But this is the interesting point. We feel only 40% of where the true sector could be if you look at a position where all 50 states regulated, and you had a total attainable market with open licensing, a full product mix, all retail and mobile channels open, some optimum tax rates, and that offshore market being minimized. If we got to that stage, it could well reach 2.5 times more than it is at the moment, or some 25 billion in terms of a total attainable figure. Two reasons for this principally. The first is the relatively slow take-up of live in-play betting and the general sophistication overall of the sports betting offer in the US compared to what we're seeing elsewhere in the world. Remember, globally, in-play betting now represents nearly half of all sports bets placed online worldwide, and that's going to grow to 60% by 2025. It will likely probably take a little bit longer for that culture to evolve in the US and expand away from a position where point spread is really still king. But weighed against that, you've also got the upside in US sports betting in that does have the backing of the big media companies, and indeed the sports leagues, probably on a level which we haven't seen elsewhere in Europe, for example. The second reason is the illegal market, and we feel we just need to pause on this, going back to our reference at the top of the presentation, quite simply because we do feel it is being underplayed. The problem has been the overall increase in exposure of sports betting generally has also initially bumped the amount of illegal betting that's going on. The recent June 2020 survey by the AGA of American sports bettors actually suggested that over half, 52%, had admitted participating in illegal market betting during 2019. So factoring in these findings into our calculations, from a start point of where we had it at 10.4 billion GGR pre the opening up of the market, we actually now have the size of the US offshore betting rising to a peak of some 17 billion this year, meaning its legal counterpart, although fast developing, is actually only 8% of what is happening offshore. And this is significant. The key point that also came out of the AGA research we probably need to draw here, and maybe the reason why, is that while some 74% of bettors say it's important to only bet through legal providers now. 55% of them believe that they were betting legally, which basically shows you that when punters are betting, they don't know whether they're betting on a legal or illegal site. And this is clearly a problem and needs tackling, but probably on a pan-state level rather than at a state level. And if it isn't, the current rate of conversion, in our estimation, it's going to take a decade for that legal market to catch up with its illegal counterpart, and that's really too long. Good news, though, really is the US's position in terms of the top 10 nations that currently make up well over 60% of global sports betting. And basically the top line here is it's going to rise from a position of 9th in 2019 to 3rd in the world by 2024, behind only the monopolies of China and Japan. And of particular significance here is the pace at which it's growing from the right-hand graphic, as you can see, a huge 37% CAGR over that 5-year period, underlining perhaps why we're seeing so much Wall Street interest in the sector this year and its growing cohort of stocks. The relative growth in the decline in the UK market is also an interesting finding from this slide, reflecting both the peak maturity of British sports betting and the regulatory headwinds to come over the next 2 to 3 years. Just a couple of slides to finish on the numbers. We felt we had to show something on iGaming and the potential for that sector to follow, because this is probably one of the real reasons behind a lot of the Wall Street interest going forward. Now, I know this is a sports betting conference, and in terms of the bigger picture, there are other numbers that need to be considered. But the reality, of course, is that we all know that sports betting and iGaming work best when they're partnered together. So the evidence we're seeing, especially in the 6 states that have already confirmed iGaming legislation, and particularly in New Jersey and Pennsylvania, is that they do work well together. And we're looking at potentially a further $8.6 billion worth of value to the US economy from iGaming still to come by 2030, or at 18.5 billion combined market. Now, if you add a further 8 states to those 12 that we have represented by the blue and grey bars, you could see that market actually jump to almost north of $25 billion. Now, quite simply some huge numbers to go alongside the 10 billion that we've already cited for US sports betting. iGaming is basically a piggyback opportunity for sports betting, for regulated sports betting in the US. America is a sports mad country. Yes, we all know that, but deep down, it's a gaming-led nation. And just to illustrate the example that we probably all know about New Jersey, and it is really the business case and the evidence that this is, the two verticals can work together. You can apply whatever analogy you want: mac and cheese, peanut butter and jelly, fish and chips. We went for cookies and cream. I hope you don't mind that. But in short, New Jersey iCasino is up 40%. And iPoker up 20% since sports betting was added to the Garden State's regulatory framework in 2018. And you can see from the right-hand graph, the blue sports betting line and the grey iGaming lines pretty much track each other. The dips in sports betting only really reflecting the low season where there's been limited US sports action, and the variances highlighting where there's been acceleration in iGaming, but that's probably because of more eyes focused on its offer. And principally they are coming from sports betting. Okay, so the numbers give us a good indication of how 2020 has affected the pace of the rollout, but we also wanted to capture just a final slide on some of the significant trends that have emerged during this particular year, which we feel as H2 are of note and possibly of interest for the conference going forward. So to the upside, we've seen at the top of the session. So, in terms of COVID-19, it actually has had limited impact. But don't forget that is so far. If this year has taught us anything, it's that, to expect the unexpected. And I'm now speaking to you from lockdown 2.0 in the UK. So you just never know. In terms of the election, probably we have to say something on it. History tells us the US economy will grow in the long term, whichever party wins the election. And our view is gambling is probably a bipartisan concern in the scheme of things. And if you actually got in the 6 states that were on the ballot box in terms of the approval of sports betting in Maryland, South Dakota, and Louisiana, as well as casino and other gaming options in Virginia, Nebraska, and Colorado, it's a vote for the sector in a good way politically, which is going to impact on sports betting going forward. The third is that shift to mobile, which has happened, and the need for tax dollars that the pandemic may be driving, or will certainly drive. The importance of fast-forwarding regulation may emerge as a result, as that quest for tax income happens, and we see in sports betting this could be some 1.4 billion worth of tax dollars by 2023, and a further 1.6 billion in iGaming, which are not insignificant numbers to the US economy. In terms of Wall Street, we've touched on the backing there now is to principally most of the bigger brands that are out there, and in fact, if you look directly or indirectly through their holding companies, there aren't many that actually don't have some links to Wall Street investment going forward. Obviously, the flotation of DraftKings in the spring during the year was the major activity that squared that particular loop. And we now also see the data suppliers such as Genius Sports and Sport Radar following suit. This can only be seen as a good thing. The media making betting mainstream and driving younger eyeballs. Well, significantly, the media brands are a lot more active in the US sports betting market than elsewhere in other sports betting markets around the world. And companies like Barstool will drive a younger demographic into the sector. And that's, again, has got to be seen as a good thing, as have the sports leagues being centrally invested and no longer opposed to the activity. So they've actually gone from a position of being, pretty anti to then looking at integrity fees to now being in a place where they're actively securing partnership deals. So all the 4 major professional sports leagues have been active in this area, as have individual teams and franchises, and even the NCAA is probably the last major holdout, likely to follow suit going forward. And lastly, the iGaming bonus emerging as the icing on the cake, if you like. And if the pandemic has if anything, the pandemic has accelerated those discussions in regulating iGaming alongside sports betting. To the downside, just some things to note, really, in terms of that low season impact. And, does that raise questions that the US market as a whole needs more exposure to other sports that are happening throughout the year to ensure that you have that genuine 365 24/7 market? Now, we did see some activity in sports such as table tennis, MMA, soccer, golf, darts during the year, but you're really looking at a culture change towards always-on sports like tennis, golf, and soccer going forward before you see a major contributor towards overall growth. Esports, during the year, we actually did our new H2 esports betting tracker during 2020. And this is noteworthy simply because we found that although there's been much hype around the expectation of the potential of the vertical, it actually doesn't have that much impact in terms of contribution towards betting on the market. Esports fans, while their viewership is actually more than some of the major league sports, they tend not to bet on the games as much, suggesting that it's perhaps not going to be the bridge from sports betting into iGaming that we perhaps expect or did expect at the start of the decade. I won't touch more on the offshore number, but only to say that there's still that huge activity offshore, and that does need to be tackled, which is just obviously a downside. And then probably also regulation, because although you've got here a market that is very much operationally and financially in the fast lane and pushing the envelope, the question really is whether the various state legislators can keep up with that pace. And the demand for the market to accelerate financially may highlight some of the current challenges in states where there are a number of stakeholders involved before the market opens up. And, this is particularly true where tribal gaming is perhaps more resistant to embracing, for example, the move online than you may see in other states. And this presents a unique challenge in its own right. And then lastly, just to flag what's happened this year around the rest of the world, but probably not so much in the US, but we have seen probably the other major headline around the shift to online and mobile, a gradual toughening of regulation on the sector, particularly in Europe, where things like advertising, bonusing, integrity, and deposit limit restrictions across key markets in the EU have all led to a tightening of a regulatory grip on the sector, the likes of which we haven't seen before. And it will be important for the US market to learn from these lessons going forward as it matures. Okay, I'm conscious that we perhaps used up a little bit more time, but we just want to put one final thought out to you, and that's looking forward, not just at 2020, but what might happen for the rest of the decade. And does what actually we have seen in terms of the huge growth of online and the mobile channel in 2020 in particular mean that we are headed towards a ship that has sailed in terms of a real move to digitization? And is this going forward? Are the 2020s going to be seen as the decade of digitization? The main drivers probably to consider here that we've noted is that sport probably now needs betting more than ever. The fact that the longer it goes without fan engagement, without fans in the stadium, without that revenue from spectators, it probably will look to the betting channels to fill that gap. And sports like golf in particular, and the recent innovations that they have had with live on-screen odds, at the CJ Cup in Las Vegas and the Zuzu Championship recently, and players like Bryson DeChambeau now in Masters Week, being the face of DraftKings. This is great examples of the ways the sports are now using betting to drive up revenues within their own verticals. The step change to mobile and remote behavior has also probably already happened to a certain extent. We've already seen second screen behavior. It is principally the norm. And of course, there'll always be a demand for social interaction, particularly in the way American sports are watched. But wagering is going to be much more instant and convenient online, where, for example, things like price comparison, access to social media, and the ability to interact directly with your bookmaker are all new innovations that are going to drive the digital offer much more so than what we perhaps saw previously last decade through casino-led sportsbooks. We've put in there the Las Vegas Strip up for sale, and the incredible news that Las Vegas Sands is looking to explore a $6 billion sale of its Strip properties. Just to pose the question, is that the beginning of a new trend for bricks and mortar gambling during the rest of the decade? And just to cite the difference really, and that if the more we have a retail offer going forward, the more it has to be different from the offer that is maturing and developing online. The online offer is principally transactional, which means the retail offer will have to be immersive and experiential in the way that is presented to consumers, and particularly to appeal to a new market that is millennial and Gen Zs increasingly. It is almost 100% transactional in Europe at the moment, but maybe that's not quite the case yet in the US. And then lastly, are we actually going to see the emergence of fintech during this decade and real digital money? Cryptocurrency only recently has now become a viable option in PayPal, and we may actually be seeing the start of a cashless society that we've all talked about over the last 3 to 4 years. Just to pose the question that maybe that actually now may start to happen for real. So listen, thank you ever so much for listening. I hope that was helpful by way of an introductory sort of helicopter view, if you like. Lots to ponder for sure, and thank you for listening. And I've, of course, been more than happy to follow up with anyone direct, if need be, after the event. So thank you and enjoy the rest of the conference.